And I've seen properties that are amazing inside, great experience, but it's in a crappy area, and it can absolutely ruin that business model.
Welcome to The Path to Wealth, the show about well-being, fulfillment, and financial freedom. And I'm your host, Hannes Henschel. Welcome back to The Path to Wealth. I'm your host, Hannes Henschel. Today we have a special guest joining us, Justin Mosley. Justin is a private fund manager, real estate operator, and educator specializing in short-term rentals. With his company, Leicestermore Capital, he has been helping veteran business owners and sophisticated investors maximize their returns through short-term rental properties. Justin's dedication to supporting veterans in investing and life after the military is truly inspiring. As a former Machinist made in the U.S. Navy, he brings a wealth of experience to the table. Thank you so much for joining us today, Justin.
Awesome. Thanks for having me on.
Yeah. So let's get going. Where did your transition from the military to real estate come in? Like what pierced that interest and what made you jump on that?
Yeah. So after the Navy, I went the non-traditional route, going straight into the military after high school, and then went to college in Florida. And I was kind of working in corporate America, and I met my wife, and to put it out, I was kind of one of those guys that never wanted to get married. I was like, I'll just live the bachelor life, everything will be all good. And then I had a corporate job, and this woman walked in, and I was like, I'm going to marry her, and that's effectively what I did. But the caveat to that was she's actually British, and she was sent over for 3 years, and then we dated, and then she had to go back. So I then decided to quit my job and go to grad school in England. So during that time I was over there, I really started kind of thinking about, what do I want my life to look like in the future? I'm a risk taker. I try to take calculated risks, but, I started realizing that, just working a job for the rest of my life is probably not going to be fulfilling whatsoever. So after kind of grad school, I did the normal course of events. I read Cashflow quadrants, not actually Rich Dad Poor Dad. To this day, I haven't read Rich Dad Poor Dad, but it's the same, philosophical, understanding and beliefs, right, in that book. And so I realized, like, either I'm going to start a business, work in real estate, or get into the stock market. And I chose the stock market initially. Quickly realized I'm not Warren Buffett. I can't analyze a company. I can't analyze like an executive team. So then the natural, kind of evolution was into real estate, and that's how I got my start.
Yeah. I think there's a lot of people who have to realize we're not Warren Buffett, and I also went through that kind of myself. I did start trading a bit with stocks and just, for example, the other day I sold all my Nvidia holdings because I was like, because I cannot make sense as to where this is going. And that's when I realized, it's not tangible enough for me. Just like you said, everything that you just mentioned yourself rings true for me. And I will just become part of the statistic, of like the 90+% of investors that actually don't even beat the S&P 500.
Yeah, it's tough. And it's like, I have a pretty, high risk tolerance. I don't typically do risky things, but I definitely realized during that time, like, not only did I not know what I was doing, like, it just almost felt like gambling to me. And that probably was just due to inexperience, fresh out of grad school with a financial economics degree. I thought I knew something, but quickly realized I got punched in the face and realized I knew nothing.
So why are you focusing on short-term rentals?
So how I got into it, I actually did the reverse of most real estate investors. So I started off in commercial syndications. So, after listening to podcasts, doing kind of like a lot of self-education, the common theme across the board was, I wish I would have gone bigger, faster. So I was like, hell, what the hell? I'll jump into commercial syndications and figure it out. And, that's where I cut my teeth. But, ultimately I was, still really green, a tiny portion of the GP, won a deal, and then realized that, most of the money you make are either in the fees or in the back end, right? So I was such a small portion in the deal that, there was almost no cash flow, right? So, and the caveat that I still love multifamily as an asset class, but my thoughts were, well, while I'm doing this, let me try a different strategy. So when I was in South Florida, that's where I settled, I started buying, small residential multifamily in like West Palm Beach and condos in Palm Beach Island and properties in Fort Lauderdale. And I was like, well, let me try to put it on Airbnb, VRBO would do the short-term rental. And like almost overnight, they took off. I was making, $2,000-3,000 a month per door just executing that strategy. And that's when I just kind of fell in love with it and I was all in.
So I think you hit one of the common problems is that, multifamily syndications are a very long haul and you need to put bread on the table. And I think that's where short-term rentals, you have like a way more immediate reward, cash flow, all of that, compared to if you're a small part of the GP in the syndication. The reward is like 5-7 years out, depending on the market cycle, where we in the economy, how are the deals transacting right now. So it's interesting that you hit gold there. And how many years ago did you start doing that in South Florida? Because it's like the perfect market to be in.
It is. And, some of it was just timing. So it was 3 years ago and I was buying and, I definitely was dumb luck, right? I think now every property that I bought in the South Florida market anyway has almost doubled, if not tripled in value. So, that's just kind of the nature of investing. But, ultimately, if they didn't, they still would be cash flow positive. And that's kind of a part of my investment thesis. Like I'm much more driven towards the cash flow aspect rather than the appreciation and all the other. Everything else to me is just kind of icing on the cake. But if it cash flows, that's what I'm after.
I think that, as long as you focus on sustainable, healthy cash flow in the majority of market environments, you're in a good position. And I think that's like, I think if you're running for too much appreciation, it's then you might as well go back to the stock market. It's a similar game. It's a bit like the gamble, where you just hope that the overall environment lifts all boats and that you somehow figure out where to sell off.
Yeah, no, 100%. So,
yeah. So give us some insights. You're about to structure actually a short-term rental course. Mm-hmm. What are some of the things that make or break a successful short-term rental deal?
Yeah, that's a great question. So really, I look at it in kind of 3 pillars of short-term rentals. So to kind of give a little bit more context, I think especially in the run-up of short-term rentals becoming popular, I think the average person could, buy a property, throw some cheap IKEA furniture in there and crush it, right? I think now that has very much changed. I think you have to be very thoughtful about the market that you're going into. I think you have to be thoughtful about what's going on in that market. Obviously, there's a lot of risk associated with it, but the 3 pillars I think that are most important now are, experience, design, and process. So what I mean by that is, you need to create a true experience for your guests when they're coming in, and that helps with obviously bringing guests back and telling their friends. The design has to draw people in initially, right? And then process. It's what's really great about short-term rentals is that majority of people that have a short-term rental, I think the number is 85%. It might be less. Like own less than 2 properties, right? So you're truly up against mom and pops, right? Like you're not going after institutional operators or truly even institutional capital at the moment. That probably will change, but if you can really build out some strong processes, you can really be successful, even in markets where you see the news and you hear Airbnb bust and all that kind of stuff. Like you can still thrive.
Yeah, and I think there's a lot to be said. So when I travel, obviously the first appeal is definitely in the pictures, the design that you mentioned, but I think the real delivery comes in the process. And there's something to be said if somebody is too sophisticated and it feels like very
almost sterile.
Yeah, almost sterile. I don't like that because then I might as well just go to a hotel. And depending on the market, what I've learned on my last trip is that actually Airbnbs, the shorter you stay, they're like not competitive in pricing. So if I want that sterile kind of deal, then I go to the hotel. Yeah. But the process is very important. Like for example, self check-in. I think that should be like the new gold standard. There's nothing more annoying than me actually having to coordinate with somebody and then they're not available. And even so, it might be personal for them to be there, but I much rather have them check in with me after I'm already there on my terms than having to wait till I can check in on their terms.
Oh, 100%. And I think COVID really accelerated a lot of that, especially the check-in piece. And it's interesting because, like you said, if I'm going to a city and I'm only staying for a night, it doesn't make sense for me as, going by myself, not bringing my family to jump into an Airbnb. I'm going to go to a hotel. But even in hotels where they try through the app to kind of like contactless check-in, it's still not great. It's almost a 50-50 because I could do it on the app and I can't get in. I still have to go to the front desk. So it's really interesting that even hotels haven't figured that out yet, which, Airbnb obviously has figured out pretty seamlessly.
Yeah, you're right. There's so much new technology coming in both spaces. Like the other day, I checked into a hotel where there was like a kiosk, and I was basically speaking to a Filipino on the other end of the world
Oh,
who was doing a live check-in, and obviously they're like probably 20% of the cost compared to the front desk person in the metropolitan area in the US.
yeah. But I mean, you still have to go check in, right? Like you can't just pull up
Yeah, I still had to go check
with
in.
your,
Yeah.
and it's like,
It's not direct.
yeah.
But I think I don't know how the hotel probably has more reporting compliance, like at least from international travel. I know that the government has a real interest in knowing that the ID and the personal line. So maybe the hotels don't want to touch that. I don't know what the reporting for an Airbnb is. I mean, basically Airbnb verifies that part on your end, and you're just like, yeah, there's the person here.
Yeah. I mean, I definitely don't know what the criteria is in hotels. I mean, I love hotels. I think a part of why I love short-term rentals, like it's actually closer to the hotel model than it is to standard, long-term rentals or even multifamily. But yeah, I don't know what that process looks like, but I'm pretty sure Airbnb definitely, they do their best to make sure that they verify the person that's coming in. So I don't really see why hotels couldn't figure that out either, but but I don't know.
So you said it's dumb luck that you were in the right market at the right time. But at the same time, Florida is not Florida everywhere, and not every corner is a successful short-term rental. How do you pick the winners, and how do you pick where you think there's like actually potential for you to have a properly cash flowing property in place?
Yeah, so every market kind of has its own dynamics. Really, to me, it's about strategy, and that strategy can change market to market, right? Whether you're in a coastal market where you're going after purely vacation rentals, or you're in much more urban, but you could be carrying your strategy to a little bit more midterm, like traveling nurses. I think, we've done a little bit, depending on where the market is, really cater to what the needs of that market is. So if it's kind of much more transient and you can build relationships with, different businesses and kind of get almost like a preferred vendor status with them, that can be a really healthy strategy in those markets. Another good strategy is even in a rural area, if you have a home that has 5 or 6 bedrooms, even if there isn't a lot of demand, there may not be a lot of supply for that type of product. So you can still make a really healthy living in those areas as well.
Yeah. How do you understand demand and supply before you commit to a property, before you commit to an area?
Yeah. So, I mean, frankly, I think a lot of people will tell you a lot of different things. You try to do your due diligence as much as possible, like any other asset class, right? Like the reality is, like there are comps to some degree. You can compare, properties with an area over history, but you almost have to take out the COVID years because they've been inflated so much. So, it's a healthy bit of AirDNA using the softwares that exist now, and then doing your own underwriting, because we use software, but ultimately we take it in house and we do much more like hands-on. And then it's almost instinct and feel for the area. Like, do you actually believe that you can be successful here? So it's probably not the greatest way to explain how I'm doing it, but it is a little bit of intuition in it as well. Because when you talk about experience, you talk about areas and stuff. Like it needs to feel like a good place, because you need to have your guests come in and feel good. And I've seen properties that are amazing inside, great experience, but it's in a crappy area. And it can absolutely ruin that business model when they don't feel safe, or, it could be a list of things that go on.
I think it might be an untangible statement, but I totally agree with you. And I think I just read a study about luck, and intuition was a large chunk of how people create opportunity for themselves. They follow intuition. And I think, for example, even restaurants, there are certain corners on a block where a restaurant works, and it might just be on the other side of the street where it doesn't. And I think the same is true for what you just said. If I feel a certain way walking into a property, it almost doesn't matter what it's like inside.
Yep. 100%.
And in that sense, numbers don't tell the whole story. It's the intuition and it's the feeling of yourself and the client walking into that particular unit. And it could be as simple as having one really shady house on that corner, but it's right next door to the entrance of your short-term rental.
Yep. 100%.
That's all it takes. The rest of the neighborhood could be great. It could be like the average income could be there, the school and all of that could be great. But maybe there's just one group of people hanging out at one house next door to your short-term rental, and you don't have a deal.
Yeah, no, 100%. And I think it's always kind of marrying those two together, because we definitely walked away from properties where the numbers made sense. We felt confident, but it just didn't feel right. And it's like, you know what? If it doesn't feel good, we'll walk away. So
yeah, I don't remember the guy's name. I was listening to Tim Ferriss' podcast, and he was referring to, if it's not like a hell yes, it's a no.
Yeah, I love that expression. That's true.
Yeah, and I think especially if it's something like a short-term rental, it's all about how people feel there while they're your guests. That's part of what will go into the review. The feedback they will give you is, how did they feel? It's less about some metrics, or hey, yes, we had a fire extinguisher and we had an oven, and we were able to do the laundry and all of. You can check the whole list, but if they didn't feel right, you don't get the traction on the property. Airbnb won't reward your property in the same way that it will reward other properties that are being rented over and over again with 5-star reviews.
Oh, 100%. And there are very few things that will kill your property faster than, it was great, but I didn't feel safe in the neighborhood. Like that is that will 100%, like you might as well just take it off, start all over again, either sell it or whatever you need to do. So
yeah. So how do you plan to structure the course? What are you planning to deliver in the course for people that are interested in getting started?
Yeah, absolutely. So it's going to be 10 modules. We've already built it out. And it just goes through every single, it takes the vantage point of someone who actually is not only new to short-term rentals, but also new to real estate. And it's something created by my wife and I. It's called the Short-Term Rental Millionaires Blueprint. And effectively how I've done it is, like, I've just used the strategies that I implemented in order to get my business up and running and build my portfolio and do some of the other things we've done, whether it's partnerships, whether it's building out the fund, and using those same philosophies. So it walks through, how do you analyze the market? How do you underwrite a property? How do you source your debt? What are some of the great debt products for that, right? So explaining DSCR ratios and why it's so important to, if you're going to go ahead and take this journey of doing the STR. Yep. So you're going down this journey of getting into short-term rentals, but you also need to make sure that you're trying to mitigate as much risk as possible, right? So if something happens where you can no longer run the business, or maybe legislation happens which that's also something I think people are always conscious of, but it's a little bit overblown. We can get into that later. That you can put a long-term tenant in there and it still meets some level threshold of cash flow per month. So it's like teaching all those strategies and how to operate it and put in the processes to where, this is an active business, right? Like this is not, buying, like a single family home, just putting a renter in there and just kind of like walking away. This is an active business, and I try to make it clear, but you can make it quasi-active or quasi-passive, whatever term you like to use, by using technology, using processes, using virtual assistants. And I want people to be able to really bring in some real income. And if they want to walk away from the W-2 by just really building wealth and financial freedom for themselves. And when I say financial freedom, it's not about sitting on a beach sipping Mai Tais, but it's actually controlling your debt, right? Like, when you own properties, there's still things you need to do, you got to take care of, but it's on your time, right? Like you're not having to clock in anywhere. You can set your day up the way you want to. And I think that's one of the most wonderful things about real estate in general.
Yeah. And I think having a short-term rental kind of gives you the benefits of immediate reward and cash flow that you can actually live with. But yeah, it's definitely not passive. And it's not like full freedom in the sense that you can just like abandon your properties and live in Indonesia. But I think it gives you a really good taste of freedom because you can, as you said, you can structure your day. Like you can decide when you have lunch. There's probably very rarely you have fires, like in the sense that you actually need to report to something or something is wrong. And then if you build it right, as you said, you can have overseas 24/7 people monitoring what's going on and respond for a fairly reasonable rate. And you can build a system around yourself, as you mentioned earlier, processes that support your operation in such a way that you have the quality of life and the freedom that you want.
Oh, 100%. And really, things should not, if you're setting your properties up correctly, And I'm talking about someone that this is for this course, right? Someone that wants to get in, get their first one, maybe buy 2, 3, 4, 5. I mean, you can truly self-manage. You don't need to go out and hire a short-term rental property manager and pay them, 20, 25% of, NOI. You can do it by paying a couple of VAs, in the Philippines that, truly you won't get any calls until, there is a fire or there's something that they can't answer. And really, this shouldn't be very often. So you hit the nail right on the head.
Yeah. How do you stay on top of having somebody local to turn around the units? I could see that being like a bottleneck, depending. You probably need a pretty strong Rolodex to have a team on ground that can actually turn around the units timely and the way it should be.
Yeah. So there's a couple different ways you can go. There's an actual software called Turno, and I still use it. Formerly known as Turnover B&B. I wouldn't be surprised. I think Airbnb probably sued them. But what they do is it's kind of a bid ask platform where you can actually put your property on there and go bid out how much you want to have someone clean it, and then people will say, "Oh, I'll pay this amount, that amount." And what's awesome about that, if you want to use that software, is that you can set it up to where they're taking pictures of supplies, conditions of the property, and that gives you kind of that added level of protection. So when somebody does come into the property and say, at the end of their stay, oh, that stain was there beforehand, you actually have pictures within the platform that you can go back and check, right? So that's great.
Yeah.
But how I've done it, and I like this model better. I generally build relationships with a couple different cleaners in the area, and I use that software in order to give them the alerts of when they need to clean a property, the time frame, and it's pretty seamless. Like, it isn't something that you should be touching, but every maybe once a quarter to make sure that people are getting paid on time, things like that. But again, there's some phenomenal technology out there to really take a lot of headaches off your plate.
Yeah. So it's about building those personal relationships, which probably also lets you sleep better. Like, if you're working with maybe this group of cleaners, you've kind of all, at least at some point, personally vetted them. You know that they're tied in. If you enable them through the software tools that they can execute on your behalf, and there's probably like an immediate feedback anyway. Like, if you just have a single unhappy client, you know exactly what happened.
Oh, 100%. And they're generally more willing to go ahead and bend over to resolve it, right? Versus kind of having that shield up where you're not having actual full communication with the people that are coming in and out of your property. So, I think one of the things that's true for this business and the short-term rentals and across real estate in general is, building those teams and those relationships. I mean, I think that's one of the most powerful things you can do in real estate.
So when you think in terms of scale, what's the scale? How many properties, maybe let's use South Florida as a market. How many properties does somebody need so they can actually live off this full time with like a reasonable standard of living in South Florida? And where do you think is like, where are you tapping out, where you think like, okay, now I might as well just do multifamily?
Yeah, that's interesting. So to answer your first question, I think that really just depends on an individual's financial goals, how much they're actually making. So that number could vary so much, right? So it's like, I mean, I can't give you, but if we were just going to say ballpark, and let's say you wanted to bring in comfortably $150,000 to $250,000 a year, buying the right properties, depending on how much cash you need to put into the deal, it wouldn't take more than 3 or 4 properties to provide that level of income. But again, there's so many other variables that come into play because, one of the things I also teach in the course is, I got started by just putting up my own capital, whereas now I almost never do that, right? Like, I partner, I try creative finance, I'm starting a fund, so we're going to institutional route, so they're going to provide the check. So I think a lot of times, especially when it comes to single family rentals, I think most people's instinct is like, let me save up so I can buy a property and then maybe do the BRRRR method or something like that. In this environment, it's much more challenging to do those things. But, if you're able to partner with people, it may take you more properties, but you can do it without putting a whole lot of your own capital into the deal. Now, that 3 to 4 probably goes to 9 to 10, but, 9 to 10 and you're not putting in a whole lot of your own money. I mean, I think that's a pretty good deal.
Yeah. And then kind of the second half of my question is, at what stage would you say, okay, this is this is a very intense business now, and maybe it's time to scale or change path and go back to multifamily.
Yeah, so I've thought about that, and actually, what I've concluded is I love this business. I mean, it's fun, it's exciting. I mean, I may at some point, and it's actually one of my goals, have a hotel fund. I think that's something that'd be really cool. But right now, we're actually going through the process of where we have a real estate fund for short-term rentals, and we're trying to be one of the first to bring institutional capital to this space in like a meaningful way. So our raise right now is $100 million. I have
Yeah.
pretty great partners right now that I'm working with. And, we were going to an investment bank, and what we're doing is they're pitching our kind of investment thesis, our strategy, leveraging our track record to the capital partners. And, the goal is $100 million. So we'll see. Maybe I'll jump back on in a year or so and we can kind of talk about what that journey was, because it's been hard so far. I can tell you that. And they haven't even cut the check. So.
That would be interesting. How do you deploy $100 million in a meaningful way that it makes sense for them? I mean, it's one thing to secure the check, but it's another one to then turn around and execute on it in a timely manner that they feel confident that you are generating the kind of returns they're looking for.
Oh, 100%. I think that's why institutional capital has not stepped in the space yet. I think, it's much easier to go out and buy multifamily. You can go ahead and deploy $50 million in one property and very, very easy, right? But there's just so many challenges when you're talking about buying single family, from, all the intricacies of, what goes into it. You need kind of the acquisition arm. You need like a renovations arm. And I think institutions just haven't had the appetite, but I think we are pivoting into a place where there are enough true operators out there that I think that they're realizing this is truly a different asset class, and a meaningful asset class in terms of utilizing utilizing single families, houses, but operating in that business sense. So our kind of investment thesis is, we think in the next 5 to 7 years at exit, there are going to be REITs that are going to have a certain portion of their portfolio allocated to just short-term rentals, and things of that nature. But to answer your question, it's challenging. And I think that's where institutions trying to figure out, how do we deploy large scale capital when you're going out and buying single family homes? And it just comes back again to, you need to have true operators and property managers. That's what we're doing. It's a really team effort to make that happen.
From a risk perspective, if I were to deploy a lot of money, I'd be like, one of the key bottlenecks is you're completely working with Airbnb, right? That's like the number one marketing mechanism.
That's the number one. I think it's the one most people are familiar with. But no, there's homestays. Homestays owns VRBO. So we're segmented across a bunch of different platforms. We haven't done our own direct bookings yet, but in a scenario in which a fund would be launched, like that would be a part of the strategy. Still probably a small percentage, but that would be a part of the strategy as well.
Yeah, I think in a way the platform owns their customers. Like, I'm an Airbnb guy in a way, because I've had very good track record of them providing me good experiences. There's very few experience over the many years that I've been using it where it didn't work, or it wasn't quite as I wanted it to be. And I see the kind of for example, you're familiar with Seamless and Grubhub and all of those companies, or now it's Uber Eats. Basically, the restaurants who are delivering the food don't really have any leverage anymore.
Yeah.
Like the platform owns the clients, because people much rather go on one particular platform to purchase over and over again, and the restaurant just has to give in the cut. I think it's very hard to have a sizable, even if you look at hotel chains, like hotel chains started advertising on Airbnb because it drives additional traffic. So hotels are already used, even big brands are used to giving a cut of their revenue to whichever portal is driving the traffic to their property.
Yeah, and I think Airbnb will always be a massive part of this space. I think what most people don't realize is they push a lot of those fees onto the customer versus the operators. So as long as that is the case, there's no need to really try to recreate the wheel. I mean, I'm just not about that. So we will always kind of leverage that platform. I think it's almost tied in. What is the example? Kind of the Kleenex and tissue, right? Like, someone calls it Kleenex, like it's just, that's just what it is. And it will always be that way. Well,
yeah,
we'll see.
Maybe not always, but I think Airbnb has carved out a world for itself in a way.
Yeah.
And I think it has a lot of
Oh,
loyal like
100%. They've
platform
created some,
based
yeah, they've created
clients.
some brand loyalty. I will say that, they're pivoting much more towards the kind of unique stays, the tiny homes and stuff where, some of the other platforms like VRBO is really, they focus in on, experience with family, right? So if you go on a
Yeah.
VRBO, you're generally going to, if you have a bigger home, you're actually going to perform better on that platform than you're going to perform on Airbnb because they really want to focus in on that unique stays. So like again, tiny homes, container homes,
Yeah.
A-frame homes, stuff like that. So
That's an interesting point you're making. So that the platform kind of chooses, and I'm sure you go into that in your course too, where you're like, hey, if you have this kind of asset and you wanted to perform better, this platform will outperform this
yeah,
platform.
absolutely. And it's all driven by kind of asset type, where you are, and you need to understand these things. Now, again, I would always recommend you should have your platform, your property on every platform available, because really it's a one-time setup. But you also need to
Yeah.
be conscious of, how does your property perform on that platform, and what you need to do to kind of maximize efficiency within that platform. Because it changes. It's almost like Instagram, Facebook, right? There's an algorithm. You need to figure it out
Yeah.
and hone it.
So what are some of the key reward systems on the Airbnb algorithm? I would assume it's how often you get clicked on, how often you get booked, your response time, you like the positive feedback you're receiving as a host. What else falls into the algorithm?
Yeah, so like you said, so definitely your response time is crucial for them. Obviously, the review system, and especially when you're looking at hosts, they have a lot of different tiers for how well you're doing. So yeah, the most important is probably the overall score, but they look at how good was check-in, like how clean the house was. So that's a huge one. If you start lowering on cleanliness scores, like you will get dropped down in that matrix. So there are a couple of things that really make guests upset, and walking into a property that they don't think is clean is one of those things that like people really get furious about and stuff. So
Yeah.
I'm trying to think what else. Yeah, I mean, there's a host of things they look at, and this is all obviously from the host side, being a super host, but their standard is much higher than everyone else. So if you can kind of master what Airbnb is doing from a standard standpoint, you're going to be great across the board. So
Yeah. And I think that's why customers have such a good experience and are so platform loyal, because if you raise your standards, the kind of the rotten apples won't survive. I've very rarely walked into properties that weren't really clean.
yeah.
Like in Houston recently, I had one that was a bit off, but it was all resolved.
Okay. Yeah. Yeah. And that's the thing. Like Airbnb does a really good job of making sure they can figure out a solution to the issue. And I'll say that for hosts and for guests. So they definitely will lean towards the guests, but they're protecting their customer base. So it makes sense.
So yeah, it's very interesting. So do you own any short-term rentals outside of Florida?
Yeah. So in the Mississippi market, Biloxi, in Georgia and North Carolina.
Oh wow. What made you go to the Mississippi area? It's like nothing that I have ever on my radar.
Yeah, so Biloxi, I love Biloxi. I think it's a phenomenal market. I actually just put a offer in on a property yesterday, right outside the beach. I think Biloxi is one of those places that are overlooked, but if you're from around that area, people go down there to go to the beach, to casinos, to gamble. Yeah, it's a hidden gem of an area and stuff. And prices have not rose significantly like it has. And, Florida, it is so expensive down here, and with insurance costs that properties
Yeah.
still work, but you can get a much better value in a lot of those other markets. It's like a Savannah or a Biloxi or something like that.
Yeah. I was actually surprised. I was recently in Savannah. I was surprised about how strong the hotel prices was there.
Yeah.
Like I didn't expect it. Like downtown, the premium hotel is very, very strong pricing. I could see Airbnb do fairly well there.
Yeah, they do. Properties in Savannah are great. I mean, and it's one of those places where it's actually not very seasonal. So, you have a slow, a steady stream of people that come in for, it's just such a great city. It's like, to me, it's the epitome of kind of Southern hospitality. Like it's a small city. There's some history there. There's lots of great restaurants. There's things to do. There's nightlife. And it's just a great place.
Yeah. Interesting. Yeah. Well, Justin, this has been super informative. Where can people connect with you, and by when can people like find your course on your website? Where
Yeah.
can they
So
find
you
you?
just check my website out, and it's leicestermorecapital.com. So it's Leicestermore capital.com, all one word. And yeah, I'm on LinkedIn, Instagram, Facebook. You just put Justin C. Mosley in, and I'll pop up. So feel free to reach out to me if you want to learn more.
Yeah, awesome. We'll also make sure to add everything to the show notes.
Okay.
This way, everything is connected well. And what is something that you're currently excited about other than the fun that is in the work?
Yeah, no, just really, building out, the course is something I'm super excited about. It's my baby. One part of why I did it was, when I initially started kind of capital raising and, doing partnering with deals, I really wanted to reach out to the veteran base, but unfortunately, a lot of veterans don't have, $150,000 burning a hole in their pocket. So for me, it was really cool to build something that I can really put out to not only veterans, but people in general that want to get into this space and really build that financial freedom, whatever that looks like for themselves. So that's the thing I'm truly excited and proud about.
I like that. So I'm glad you're doing it, especially for the veteran base. I think there's a lot of work to be done there to help.
Yeah, I just want to play my part.
Thank you for joining us at The Path to Wealth. We hope you enjoyed today's episode. Check out our upcoming guests and be sure to share it with all your friends and family that want to take their life to the next level of wealth.